Hey guys, we're here for our next panel. We have Munir, Dennis,
Dennis,
David,
yeah, Dennis the
sorry,
Menace. Yeah.
David, who will be doing a talk on exploring requirements, what is needed for DEX to thrive on a layer one. And I'll let them take it from here. Can you confirm in the chat that you guys can hear them once they start speaking?
Hello, can you hear us? Hello, hello.
You guys can just start with a quick intro, and most likely they will, because there's a slight lag.
Yeah, someone said yes. Okay, good. Okay, so hi everyone. Thanks for joining us. My name is Munir, and I'm being joined by Dennis from Kyber Networks and David from Totle. We'll be talking about DEXs and discussing the adoption, scaling, and how they will thrive in the future. So before we start, why don't you guys introduce yourselves, the project you're working on, and what are you most excited about?
Yeah, so as I mentioned, my name is Dennis. I fell down the rabbit hole in early 2016 with Ethereum, and I've always been involved in this space. And a few years ago, I joined Kyber, and I'm head of ecosystem growth there. And for those of you who don't know, Kyber is basically a liquidity provider that lets you swap one token to another in any number of use cases, like trading and being integrated into DeFi dApps and completely new and different cool things.
Great, thanks. I'm David. I'm the founder and CEO of Totle. Similar timing, I fell down the rabbit hole late 16, early 17, and became super enamored with decentralized exchanges using Ether Delta at the time. And ever since, wanted to further the decentralized exchange space and community. And so we built tools to utilize all the decentralized exchange protocols in one interface and one API. So that's what we do at Totle. We offer a business-to-business offering through our API and widgets. You can access all the decentralized exchanges on Ethereum through that, and also an interface at total.exchange, which I'll post in the chat there. And yep, so here to speak.
Cool. Yeah, and I represent Paraswap.io, which is a liquidity aggregator on the Ethereum blockchain. We allow traders and dApps to get access to the best market rates, arbitrage opportunities, and SDK and API. Very excited about the growth we've seen in the DeFi space the last couple of months and the impressive numbers of projects that show up every week. Let me give a brief introduction on DEXs to those of you who are not familiar with the subject. So DEXs aim to solve the middleman central point of failure when exchanging value on the blockchain. It seems non-intuitive to newcomers to the crypto field that exchanges are made in centralized platforms. This is due a little bit to limitations on the underlying blockchain, but a significant progress has been made so far. So DEXs have three properties. The first one is being trustless by being non-custodial. The second one is that they are permissionless, so anyone can plug in to the DEX network and use it directly. And the third one is being censorship resistance, which means censoring the DEX is as hard as censoring the underlying blockchain. The decentralization of DEXs is a spectrum. So some DEXs are semi-permissioned, semi-custodial, and so on. But at the end of the spectrum, we find what we call pure DEXs like Uniswap, Kyber, Bancor, and so on, which means all the exchange components is written on smart contracts, whether this is the price feed and the execution of the trades. And users can come in with a wallet like MetaMask, Ledger to both get the price and also execute the trades. So the last 12 to 18 months, we've seen a huge evolution in the DEX space. And Dennis, you operate one of the most used DEX protocols as a protocol and as a UI. You also publish a monthly report regarding the ecosystem. So what insights can you share with us regarding the trends, so whether this is the growth, the category of users, and so
on? Yeah. So I guess in Kyber, we're lucky to be involved in the space because it's like we have a front seat to everything that's going on in the Ethereum space. just because we provide liquidity to so many different kinds of dApps, from wallets to DeFi dApps to NFTs. So over the last 2 years, as each pocket has grown or shrunk, we've been able to see how it reflects on the on-chain kind of volume. And the clear trend we're seeing is that in 2018, it was all about wallets. So quite a bit of our growth came from wallets. And then in 2019, as we all saw, wallets carried on growing, but suddenly we had this explosion in DeFi activity as well. All these new projects just sprung up and started to provide these basic primitive services, like financial services, and you could start connecting them. And many of them were using Kyber, so we could see suddenly this huge influx of volume from there. So, if you count that volume together with Kyber Swap's own volume, that accounts for 50% of the liquidity that we provide, and this is over 10x growth over the last year. So the trend we're seeing is like an explosion in DeFi growth, not just volumes, but also number of users, number of unique addresses and new users. So for us, it's been a journey of seeing the wallets explode, like NFTs come and just appear as well. And then we had the DeFi space, and now we're currently riding that wave. And I'm curious to see what comes next after this.
Cool. That's very interesting. Yeah, the switch of the DeFi. I think everyone noticed that also the volume in general indexes is driven by DeFi, mainly in 2019, and it's continuing in 2020. And speaking of the growth, David, last year you published a report regarding the growth of the volume indexes. Can you tell us a little bit more about your findings, and why do you think we have such a significant growth in the DEX space?
Yeah, that's a great question. And yeah, we did a report last year on the growth of DEX volumes.
David, I think we might have lost him.
Can you hear me?
I can hear you. I can hear you.
Okay.
Oh, sorry.
Yeah, so the growth in the volumes continues, and as Dennis can talk about, Kyber leading the way in terms of DEXs and the volumes that we've seen, and really a takeoff in pooled exchanges in general. And the growth is really trending in a good direction. The growth itself is growing, which is awesome to see. More adopters, and I think just as more types of companies, as Dennis kind of quickly touched on, the more companies and the more types of groups that start to use decentralized exchanges, you're going to see an even greater pace of growth. Another thing to note on the volumes is that, as it becomes more economic to use a decentralized exchange versus a centralized exchange, which is just a basic concept, that really will allow for tremendous amount of people to move from centralized exchange to decentralized exchange utilization. I think that migration is a big piece of that, growth. I'll add to that there's really specific types of users and types of use cases that are more apt for that movement because of the latency, because of the designs, because of all of the things that come with DEXs, the user experience, and also developer experience, that DEXs are really, there's a very finite group of people that it makes sense for more people to use DEXs than to use centralized exchange. So for example, your trade size. I mean, if you're on a centralized exchange, and maybe it's better for a layer 2 DEX to take some of those, high frequency and very, very small trades. For layer 1 DEXs, where we're seeing growth and we're seeing a streamline of volume is in higher trade size. So $1,000 trade or greater just makes sense due to the gas costs and the fees for the platforms. So I expect there to be continued growth and continued pace of growth over time for the utilization of DEXs as it continues to become more economic and more of these protocols come online, pooled exchanges and other types of things we haven't even seen, order book or other types of decentralized exchange protocols come online in the next couple of years.
Yeah, Yeah, definitely agree. But also, DEXs come with some limitations. That's even though we had this progress we've seen within the last 18 months, but those limitations are related to I think we lost David. David?
I couldn't hear him before either. I think it must be some technical issue. But yeah, go ahead.
Okay, no, he's back. He's coming back. Can you hear us?
See me now? Can you hear? I can hear you guys.
I can. Dennis, can you hear David?
No, I can't. Anyway, let's carry on.
Okay. So I was saying DEXs are, even though we had this significant growth, but we still order of magnitude way much smaller than centralized exchanges, although I think obviously we're getting there. But there are some challenges in DEXs, which is the custodianship part. Users are responsible for their funds instead of centralized exchanges. For instance, Binance, they offer some kind of insurance for the users. We all know that this is not that doesn't come for free. At the end, when hacks happen, like large scale hacks happen, we're not sure that Binance will be able to cover for those funds. But in DEXs, we ask the users to cover for themselves and to take this responsibility. What do you guys think of this self-custody model that DEXs require?
I mean, I think it doesn't have to be one or the other. Until now, we didn't have a self-custody option in finance for the last 100 years. It's all these complex systems that we have to go through. And for the first time in history now, we have the self-custody option as well. Now, I think it's pretty obvious that this isn't for everyone, and it does have its risks. And I think the risks are related to, one, the size of the assets, so how much you want to store, how much you want to trade. That has a huge impact on your requirements, let's say. And the second is expertise, how comfortable you are trading and actually taking custody of your assets. So I guess it depends on how you feel.
Well, I lost Dennis. I don't know if you guys can still hear him.
I lost him as well. I can build on that if you want to.
Go ahead. Yeah, go on.
I would completely agree with the take that this is going to take some time. There's we haven't had an option of self-custody, haven't had an option for pure decentralized exchange or real option other than centralized exchanges up until I think this point, past year, 2 years. It's really coming online the past 6 months in terms of the option and the user experience. I was saying the developer experience for utilizing these tools is really allowed for more people to enter the space. And so I would agree that it's not one or the other. You're going to see, in my opinion, you'll see a lot of the centralized exchange business continue as is. And also then when layer 2 solutions become appetizing for those companies and those businesses become economic for them to utilize layer 2 and other types of solutions, then I believe the centralized exchanges will adopt those layer 2 technologies themselves for their own business and whatnot, and the layer 1 solutions will be used differently. Go ahead, Dennis. We were filling in as you reloaded there.
Oh no, I just refreshed my browser and I can hear now, which is great. Yeah. So yeah, no. I mean, I had said, there's just now you have choice to custody or not to custody. I think it's a completely viable path, and we should be exploring it. And I love to hold custody of my own funds rather than have it sit on with my broker, for example.
Yeah, and also this new contract wallet models that also tries to create a balance between the safety and the custody. And I think this is probably the future of self-custody for at least for the average users that will keep the safety of their funds while being custodial and keeping the choice that we like to have in DeFi. But the custody side, we talked to some regulators since we started the project in multiple countries, and most of them tend to say that the fact of being non-custodial lowers the liabilities when we operate either a DEX or even a DEX aggregator, such as Totle and Paraswap and others. But it doesn't mean that regulators will not come or maybe try to regulate the space. And yesterday, the SEC Commissioner Hester Pierce was here today and talked briefly about DEXs at the end. And what I can read from what she said is if the project is made by anonymous teams, or like it's purely decentralized, like say Uniswap or the next versions of Kyber and Bancor, regulators will have no way of trying to regulate the DEX space. But if there is a team to point to, that could be problematic. And she brought a little bit a case of Ether Delta. So what do you guys think about the future of regulations in DEXs?
Do you want to go ahead, David?
Sure. Yeah. I mean, I've talked a little bit about this before on other panels. So, and we were chatting in the green room before we jumped on here. So, to build on what we were talking about, I think it's really early for the regulators to continue to monitor this space and other tangential areas to this space, to DEXs, and I think there's still more regulation to come on for centralized exchanges, to be honest, and requirements for them. And then as it gets into decentralized exchanges, first of all, the market will have to get a lot larger in order for that regulation to actually come into place. And by that time, I think that the designs and the space itself will look differently than it does today. And then by the time that happens, then there will be more of an understanding of, custodial versus non-custodial. Where's the line, and what requirements for operators and aggregators we will have. So I think that as regulation starts to understand more of the space, I think it's going to take a good 3 to 5 years before they really come in to identify what is what, and then provide direction for groups and operators.
Yeah, and I mean, I agree that it should take 3 to 5 years, and regulation shouldn't be trying to be imposed before that, because now we have this completely new radical paradigm, right? We're talking about decentralization. It's something new. You can launch, like, let's say Uniswap, and now you can't really even touch it. How are you going to regulate Uniswap, especially if a front end is on something like IPFS as well? It gets super tricky. And maybe we're going to need a new legal framework for this, because maybe we're trying to think in terms of the conventional world, and we're trying to think, okay, is it which set of regulations applies here? Because an ERC20 token can act as a utility, can act as a store of value, can act as commodity, can act as money. It could act as any millions of things. So you have this new thing called programmable money, and obviously at the beginning we're going to struggle to find, okay, how do we think about this? Because are you saying now that consumer protection doesn't matter at all, just because it's everything decentralized and there's no one to answer? Like, say, someone anonymous could deploy a contract and it could lose hundreds of millions. What does that mean? Does that mean that now that is okay? It's a super tough thing to answer, and I don't have the answer right now, but I can see that we're all like chipping away trying to understand how we should go forward without stifling this technology.
Yeah, I think the wait and see approach is really important, and we've had that with the internet itself and its growth. I mean, speaking for in the U.S., maybe not for the U.S., but in the U.S. as I operate as an entity at the moment, I think it's really important. And Munir, you touched on that the wait and see approach, and I think that's really, really important for DEXs, for the growth of DEXs, and just the development in general. As I was saying a second ago, I don't think it's going to look the same by the time regulations come down. This DEXs and this whole space moves so fast. We already surprise ourselves as an industry, Paraswap, Totle, Kyber included, on how much we can accomplish in a month, in 3 months. So I think it's going to be some time before we see real regulation.
Yeah.
Yeah, I totally agree. And also it can be mapped to a blockchain itself, right? For instance, Ethereum, we see the head of the SEC said Ethereum maybe probably was a security in the beginning, but now it's sufficiently decentralized. Same thing with Bitcoin. Maybe DEXs will qualify as a neutral network in the future and will not be just not possible, not like even a feasible to decentralize, and that's great for everyone. I guess to have like a neutral network for transferring value. So we talked about the past, about the present, the situation with regulations and technicalities. Do you think there are lessons we can learn from centralized exchanges for the future, or even from fintech apps in order to grow?
I think there's a lot to be learned from the past, always, but I don't think it's really indicative, as Dennis touched on, this new paradigm of this is completely different than say just centralized exchanges in general, and how the custody works, and where the fault lies for any either individual or group of individuals for anything going wrong. So yeah, I think we can. I think that it's the most important thing, in my opinion, to keep it short, is really just that what can happen will happen, right? Human nature is human nature. So when you have centralized exchanges, we've seen they can get hacked. They will get hacked. That if they can have problems with the operator, they will have problems. So having more trustless systems is just better.
Okay, so let's maybe talk a little bit about the aggregation. Since the three of us, Kyber, Totle, and Paraswap, are aggregators, and while Kyber being a DEX and also an aggregator, actually I think the first DEX aggregator was Kyber. And recently, 0x joined the race as well with an API that aggregates many decentralized exchanges. But also on the other side, pure DEX aggregators like Totle and Paraswap created their own liquidity, which makes them a little bit like DEX with market makers providing liquidity and trying to maximize on this part. Do you guys think this will become a standard in the future, where we would see DEXs, each one building an aggregation, like sourcing liquidity from external places, and also DEX aggregators also building their own liquidity in order to have to bring in a little bit more and to be as competitive as a centralized exchange? What do you guys think of this model? Is it an emerging model?
I mean, it's interesting how it's developed, like all of us, well, not all of a sudden, but over the last 6 to 9 months, like the competition seems to have really heated up with all these new players. Like Paraswap has come in, 1inch, Total, like there's so many new players, like 0x, like everyone has been progressing and kind of building up on what was built, let's say, late 2018, early 2019. I think there's two considerations. So one way to differentiate is that if you need to build a completely decentralized DeFi app, let's say you want to build a margin trading platform that is completely built on chain, then you will use something like Kyber, which is also built on chain and is not relying on some kind of off-chain price discovery, because sometimes we see the price discovery can be like black boxes and we don't know what's happening. Whereas in an on-chain system, you have the luxury of being able to verify that you're getting the best price for any given trade. And then the second consideration is actually everyone seems to be plugging into everyone else's kind of liquidity, but at the end of the day, the only thing that matters is for any given trade size, who provides the best price for it, which source all the way upstream had the best kind of liquidity, which what I mean by liquidity is for any given trade size, what is the slippage? What is like as soon as you buy it and you sell it back, how much loss have you made? So who provides the best liquidity is actually, I think, going to have an advantage in this market. So even if a new player comes on and is saying they provide liquidity, well, if the rates are much worse than the top 3 or 4, then these other aggregators aren't going to pull in from that. So it's heating up. It's becoming pretty hard to kind of stand out. So, but it's actually good competition. It's amazing for the end user. You know, they get the best of the best price that's possible, and they have the option to go do it from an automated market maker, from an order book, from any manual kind of feed. So it's pretty exciting how like diverse it's become, and you know, but at the same time kind of spurring each other on as well. It's cool to see.
Yeah, I mean, I couldn't agree more with that view, Dennis. I think the competition has really created a great experience for the end user. I think that there was a period of time in 19 where we had more arbitrageurs and makers than we did takers. So that created an interesting dynamic itself for the companies or the protocols or decentralized organizations, what may have you. Speaking of Totle and Kyber and Paraswap, I think that what I'm seeing, I think that there's going to be a little bit of a standardization. You know, there's going to be the on-chain available liquidity, and that's going to be accessible. I mean, the more and more as this space grows, that'll need to be standardized. I mean, there's an amount of liquidity that's open and available to you at all times, brought to you by Ethereum, right? Yeah, I mean, it might be sponsored by Kyber, might be sponsored by something else, but in general, it's brought to you by Ethereum. And so that will continue. And then, yes, Munera, I think you're right on that it's going to continue to be a, just like in other industries, a game, a race, you know, for branding on providing your unique markets or maybe your unique style. So at Totle, we're a little more focused on the B2B side. So we're trying to build developer tools and widgets. We just released our WordPress widget, for example. So any WordPress site with, you know, with one install and one bracket WP DEX now can have their own decentralized exchange right on their website with just a few clicks and some text. So they're just different niche, and I think that's where you're going to see who you're providing it to. Dennis, you mentioned wallets. Like that's one space where I think just servicing wallets, that's a whole business right there. So it just, I think as these brands create their niche and where they provide value, whether on, you know, unique maker side or developer tools, or maybe it's B2C only, I think that's where you'll see everybody will kind of find their place.
Yeah, so let's maybe start taking questions from the audience. I see one question here. You guys can ask questions in the ask question place in the bottom of the page. So I'll read the question. I'm not sure I understand. So he said, David mentioned higher value infrequent trades are better on DEXs due to gas prices. However, due to the limited supply, high value trades, I'm not sure I understand. How can we track the current optimal zone of DEX transaction size? I don't know if you guys understand the question. I guess
I'm going to try to answer. I'm not sure if I'm interpreting 100%, but I can try to answer that. Yeah, I think that there is an optimal trade size actually right now because of the gas costs. Now, I mean, it fluctuates, right? Gas is dynamic based on how many people and how much demand there is for the network. However, I think that general size, let's take 50 cents, for example. If that's your base cost to do a transaction layer one, to submit it into the block, you know, get it into the blockchain, there's a threshold of what percentage of your trade do you want that to be? I mean, if you're trading $1, 50 cents is 50% of your trade. I don't think that that's viable situation for most people. Most people would disagree with that. So just using some common sense approach right there, taking a 0.5%, it might be $100, might be a good size just to think about. But then you have some other fees. We pass through. There's on the maker side, Kyber has some fees that changes prices, or others have taker side fees. So that creates a dynamic where now the optimal trade size might be a little bit more. But because of how long it takes for a trade to get included into the blockchain and that latency, in addition to the fees, I believe that there is an optimal trade size that may be somewhere between $100 and $1,200 just at the moment.
All right, guys. Thanks for the really amazing talk. We're going to have to transition into the next session now.
Great. Thank you.
Thank you, guys.